Hey, welcome to the Hive with Us podcast. I'm your host, Daniel Martinez. Today we have a special guest, Chris Duff. Now, Chris, about a month ago, he came to our event in San Antonio. You are from Austin, I believe, if I remember correctly.
Yeah, lived here for the past 5 years, but originally from north of Chicago. So, like a lot of other transplants, escaping the cold down to Texas.
Where are you from originally from Chicago?
Suburb called Libertyville. It's about 45 minutes north of it. So, yeah, I know folks around the area might be familiar.
I've never heard of Libertyville, but I grew up in Hammond, which is right over the border in Indiana.
Hammond. Okay. Yeah, I'm not familiar with that one either, but yeah, so many kind of trips usually up to Michigan to visit family. So I'm sure I passed through it.
The farthest I went up that direction was I went to Skokie, that I remember when I was a teenager.
Yeah, we're just north of Skokie, basically.
Okay. Yeah, Skokie's way up there.
Yeah.
I went up there for a birthday party and I'm like, this is like far. And I had a guy in my class. He lived in Skokie and he would commute all the way to Indiana every day for school.
Oh, that's brutal going through the expressway through Chicago. I can't
But
imagine.
they left early. They left like at 4 a.m., 5 a.m. It was like a 2-hour drive all the way through Chicago to go to school in Indiana. It was nuts.
Yeah, that sounds absolutely terrible.
They had a full-time driver.
Right. Oh, okay. So yeah, but still, imagine with that type of those resources, why have to commute so far for school?
I mean, I don't know. It was one of those things, but that's crazy, man. So another Chicago person. I always like talking to Chicago because the only thing I kept from Chicago was my number. So I still have my Indiana / Chicago number, and that's the only thing I kept. Because once I left there, I'm like, deuces, I'm out.
Exactly. Yeah, I still got my 847 for my personal number, but yeah, business is all 512 to drive that Texas representation.
That's funny, man. You grew up in Chicago your whole life?
Yeah, for almost 30 years. I met my girlfriend at the time, now wife, probably 6 months after we had met. I already had some mentors that were doing some work in Austin, and this was back in 2016. And we know Austin's it's no secret the growth that's been going on here, but it was already trending in that direction then. And I always kind of knew, get away from the cold up north and to a more a state that's more friendly and exciting for business side, as well as mixing that outdoor lifestyle. And I wasn't in land back then, but little did I know after getting into this industry that this would really be the most exciting state to be based in.
Yeah, 100%. What were you doing back then? What was your job? You held a position like that?
Yeah, I'm actually a physician by training. So I went to medical school and didn't actually practice. I tried to start medical device startup coming out of medical school that crashed and burned. Majorly picked up a lot of lessons along the way there, and then got into internet marketing, learned from Ryan Levesque at Ask Method. He was actually my mentor that was, based down, in Georgetown, just north of Boston. And that's why I went to a couple events down here, fell in love with the city, worked for an internet or a marketing agency in San Diego remotely, Kickstarter, crowdfunding campaigns. And then I also was in the midst of that trying to start my own business too, in trying to sell backyard chicken coops, if you can believe that. So, that's still to this day with a number of my friends, poking some fun. Hey, you left a degree or a career in medicine to go sell some chicken coops, and needless to say, that was a tougher market to break into. The margins were not great there, and then got poached away to a healthcare venture capital firm based in New York. One of my close friends was working for them, so I did that for 2.5 years. Really built up some more investing and underwriting chops as well as marketing. And then one of my other closest friends was leaving his work in Wall Street in 2019. We were kind of best buddies from high school, and we always intended to work together, always more entrepreneurial. And so we finally had the timing was right and decided, hey, let's figure out what business to pursue here. And we looked at a bunch of them. I had a big spreadsheet. I mean, we looked at pet insurance to dog walking to trying to build mattresses for people who want to sleep on the floor. Yeah, some other internet marketing avenues. And my current business partner and another close friend from high school, they had been doing single family residences for almost a decade at that point, had about 40, 50 house portfolio up in the Midwest. Mm-hmm. So we were potentially looking at expanding that out, bringing me in. But then we heard from some of our colleagues in the multifamily space in Colorado, they had a friend in land, primarily working in Florida. We got connected with him and invested in his business earlier in late 2019 to 2020, right when COVID was hitting. And it was amazing where we were making double profits right in March and April of 2020, which as you can remember, it was just a crazy time. No one knew where the economy was going, but clearly there were some green shoots, and we just expanded from there and haven't looked back since.
I think COVID was an interesting time. Now looking back at it during that 2020 to 2022 period, it was definitely a very curious time to be like. I feel like even then I was very new to what, like early COVID. I just moved to California. Like it was crazy, man. But looking back at it, I think there was a lot of good things that happened during COVID, and a lot of people are like, the world shut down. It's crazy, but. On the business side, I've seen so many people make a lot of money during that transition period.
It was a good time to learn, good time to get a lot of mistakes out of the way too. I mean, there were some properties we bought back in our earlier days that we probably would have lost a lot more money buying now as the market got a lot more efficient and more difficult. But you almost couldn't lose money for 18 or so months back then.
Which is insane. Insane to think about. But when things are trending up, it's everybody looks like a genius.
Yep, exactly. Yeah, easy to get caught in the greed and start relaxing your principles and underwriting and everything. And we definitely paid the price for that as the market started to turn. And I think that's happened to a lot of people. But sometimes you just gotta survive, and more time in the market can sometimes equal success in the market, and that's what we've really found too.
So right now you're mostly serious land.capital. So how long have you been doing that, and is that a fund backing?
Yeah, so we just started this earlier this year. Like I alluded to in my myself and my two partners started in land, late 2019, early 2020. Initially, we ran a smaller fund. We're more, institutional guys. We thought we were going to take this individual's business in Florida, $1 million business, try to scale it up to 10. But as you well know, in the land business, a lot of cowboys, cowgirls in here, that don't like really following operational procedures and so forth. And this guy just couldn't grasp the context of how to deal with serious limited partners and so forth, and reporting and all of that. And so unfortunately we had to remove him pretty early on, and we had to take over the asset management role, teach ourselves on everything in the land game. A lot from Ari Tipster, learning from Seth, as I think a lot of folks coming into land flipping do. And so again, we developed some success from there, got our investors solid returns, and then my two partners and I, we were just using our own capital to run our flipping business. And that had gone well for 2020, 2021. 2022 was just a down year for us in general. And I think a lot of people, I'm involved in other investments too. I mean, I had a drawdown of like 85% of my net worth, other things going on, personal life, baby on the way, trying to move into a new house, as interest rates going up. And again, the real estate market was turning. It was just a tumultuous period where we were just, trying to figure out how do we continue to make this thing work. And so that started, continued a little bit into earlier 2023. But then, I really sat back and thought about it. My two partners and I were, we've always had a bit more capital backing to work with. We're, much better at the underwriting side compared to direct marketing. We're connected with a lot more capital through our internal networks. We understand and can draft a lot of legal agreements, participate in more complex deals. Like, let's try to reorient our business. And so this is where we look to see, a lot of the coaches in the space, in the land flipping space, really start to push using OPM, other people's money, as well as opening their own funding outfits in addition to, just direct marketing themselves. And so we just made the decision, hey, let's try opening up funding side of our business, market it out, see if there's any type of hits here, now that the industry seems to be transitioning towards the coach is really advocating, hey, try to scale up your business faster, even if you're giving up a share of your profits. So we started marketing in May of this year, and almost instantaneously we started getting some solid leads coming in. We did our first deal in late June, and I think we're closing in on about 20 or so. I'd have to check on that, but by the end of this year to date revenue plus anticipated portfolio value, we're going to be closing in on between 1.5 2 million or so, and have about another $1 million in expected end sales value in the pipeline here. So the business really took off quickly, and these are only smaller flips, between 20,000 200,000 purchase price on average. And so we're trying to expand much beyond that into mid 6 figures to high 6 figures, low 7 figures, subdivide, entitlement type deals as well. And that's why it was great to connect with like you and Anthony and some of the other folks pursuing those bigger deals, because we can match our capital backing with the deal flow that y'all have, and just really exciting opportunity to pursue.
Yeah, there's a lot of opportunity. One thing I've noticed, I think I've been in the land space for 5 years now, or almost 6. No, it's been 5. It's been 5 years. There's a lot of people in that lower space. So there's a lot of deal volume you can definitely get on that low end of $100,000 or less. But when you get to the higher tier level, there's still a lot of volume up there, but there's less people doing it. So it's just networking and meeting those people that operate at that higher threshold, because they're out there few and far between. You just gotta network around and make some phone calls and make some emails and make it happen, make those connections happen. Because I've only met a few people that are operating in the higher level space, but man, the low level, there's a lot of people, a lot of people. I was having a Twitter banter on somebody buying desert squares in California the other day, and I'm like, I'm good. I'm trying to stay
and those are some of the hardest parcels to work with. I mean, we've dabbled out there in like West Texas stuff before, Brewster County and so forth, just a little east of El Paso. And again, like most land investors, you don't have on the ground presence in a lot of these areas and have to trust realtors and go out there. But they are so hard to review, even from an aerial perspective, and even figuring out access and everything. So, even though it's more of a red ocean to participate in those and think, oh yeah, I can buy these for cheap and just finance out. But, in our opinion, that those have been some of the most difficult properties to underwrite in the first place.
I agree. I don't know why a lot of people go over there, and I'm like, just stay away from the desert, man. Stay away from the desert. But people are like attracted to it, the low price points. I'm like, it's a low price point for a reason. Like, come on.
Right. Yeah, exactly.
So you've done a little bit of funding. You've done a lot of transactions here and there. What are some tips you could tell like new land investors to stay away? I mentioned the desert because I think it's a simple one, but simple stuff that you've seen that like, hey, we're not even going to touch that because I just don't understand it. Or you might not like it because it's not the ideal. And this is one of the things where like us in land, we can be super specific because there's a lot of ideal properties.
Yeah, exactly. And I mean, I'll just plug this now because I, do this day in, day out. I love to underwrite, but we were getting so much deal flow that was just overpriced coming in, and we're getting a range of investors, some folks who've been doing land even for 4 or 6 weeks, even some folks who have been in the game for a few years. And I get it on the direct marketing side, especially as it's become more costly, it's more difficult to find qualified deals. Like you really want to make the numbers work, and any of the deals that come in, it's easy to get attached to it and just find, oh yeah, maybe I can work out the numbers this way. But that is just a fool's game, especially as it's turned into more of a buyer's market. And we've just seen even more and more churn in the industry where people, they get caught in a couple bad deals and all of a sudden their properties, all their cash is tied up on things that won't move for months. So, we're just super, super focused on, really advocating for people, hey, you have to be buying at the right price. I mean, it's the simplest thing to hear, but I only mention this because, a lot of the deal flow that's coming into us is, probably 3 out of 4, almost 4 out of 5 deals is overpriced. Sometimes significantly so, like double what you should be paying, and very easy to get caught into these. And so I had took all of this data and just started a Facebook group called Land Daily Diligence, where Monday through Friday for an hour at 2 p.m. Central every day, barring reschedule, people can just send me in deals, whether they're for funding or not. I will review them live and on DataTree, on Redfin, et cetera, show my exact underwriting process and advocate for, hey, we think this purchase price is appropriate, or hey, stay away from this deal entirely. And we're national in focus, so we see land from all over the place. Of course, you have to treat each geography with respect it deserves. So just to name a few, and keeping that pricing side as front and center here. Like I always say, pretty much every day is don't lose money. That is our number one rule here. You just have to make sure you're not getting caught up emotionally in a deal or trying to make the numbers work. But easy ways to get caught. One, no matter how many times I mention it, it seems folks will send us a deal with some type of wetlands on it. One of the easiest things, we might get these every week, every 2 weeks. We know how hot Florida is for a state to go after land investing, or along the East Coast. And almost always, if you get a big parcel in Florida, which is rare because it's more of an infill type of state, but if you get one of those sent over, and sellers looking, going to be able to sell at half market value, there's a reason they're trying to sell that to you, because it almost assuredly has wetlands on it. And a lot of people are able to track, okay, flood zone, have the layering there, and oftentimes flood zone doesn't really matter in a lot of areas, especially along the East Coast. But you always have to be using your wetlands filter either on Land ID or some of the free governmental ones. Just check in on that, because that can basically make that property completely worthless, or you can get stuck holding it for a long time, maybe have to do tens of thousands of dollars of dirt work to even make it viable. And I speak from experience too. We got caught with a couple of those properties early on in our business, and it's easy to get turned around there, but it's a super quick 2-minute check. Just make sure you're not buying with wetlands there. So that's definitely a key one to always keep in mind. Another one, there's a million I can go down, but just to mention a couple that are more common. Another is in the infill space is really, really double checking your utilities. Those are, again, everything on paper on aerial can look like, oh, this is just a home run property, I've got it. But if you don't really pound the pavement, call the city, email them, keep finding somebody who has an answer for, hey, does this sewer line actually extend in front of the property? And if not, what's the cost of this going to be? I mean, we were looking at one in Oregon earlier this year that seemed like a $20,000 buy and sell for 80, just perfect infill lot. But the reason we could get it so low is the sewer didn't extend out to the front of the property. It needed an extra 60, 70 feet. That was going to be upwards of a $20,000-$25,000 job just to add that on. So it really started cutting in the margin. Plus that 80,000 price wasn't as accurate when we dove in for some of the underwriting. But that took a long time to figure out. You need to actually pull up the maps and understand what you're looking at. Sometimes there can be water lines that shut off near the property that are city water, and then county water starts a little bit further off. We've seen that. So again, I have kind of a million examples about infill lots specifically, but really, really need to pay attention to utilities and make sure you're not getting screwed over in a deal.
Yeah, we don't really do many infill lots ourselves, so it's one of those things where I know the nuances, but even then I still have to double check everything, because utilities is such a big one too, because if it's already cut up and it doesn't have it, it's going to take a lot to get it there. And then you got to understand the septic laws too, which is why Texas.
That's right.
Like if you understand Texas law, you just look for stuff that's 3/4 acre or higher and info lot, and you're kind of straight because you can put a septic out there. So I didn't know you're doing nationwide. Nationwide kind of throws a wrench in a lot of things. So then you have to understand a lot more in detail, because I think Florida's a great place to flip land, and I know a lot of people doing a lot of land in Florida. Is a great place, but man, there's a lot of land and there's a lot of flood zone.
Yeah, absolutely. And I mean, we mainly did Florida for the first couple of years of our business. I mean, it's great. Obviously, it's super competitive and only been growing more so. But yeah, I mean, national in focus, wouldn't recommend that if you're first getting into the land business. But, at this point, at Partners and I, we've looked at hundreds, if not thousands of deals. And, if you're careful and have a set process, and we do, we have to, multiple people sign off on certain parts of our underwriting before we ever wire money out. And, ultimately, it doesn't matter what land you're looking at, as long as you can, go through your, base process. And then also, we always, look to work with local realtors for our dispo process. Unless an originator is local to the area, that's definitely a more rare circumstance. But we're super picky about realtors that we work with, and we don't necessarily try to find one that might work in a multi 4 or 5 county region. I'm always prefer finding somebody who's even sold a lot, just a street or two down within the past few months. That's always the best. And I'm fine, starting a new relationship there, and then just gauging, less on the getting CMAs and the email paper. Like I know some funders and so forth will ask for that, but honestly, I think CMAs, especially for rural lots, are not that helpful anyway. I'd rather get a realtor on the phone, ask them very specific questions about the area, and then try to get them out to the property that we're looking at as well. Of course, we try not to burn relationships, so I'm not spraying and praying to realtors in the area. I try to pick one at a time, and basically promise them, hey, we'll give you this listing if we're able to close on the deal, assuming the numbers work out here. But that's the way that we overcome some of those issues of not having an on the ground presence, and that I can now look at effectively every state in the country, and have my general principles, and then also know what to ask for specifically based on people local to the region.
Yeah, I haven't opened up nationwide because I'm not ready yet, man. It's a lot. When you get into nationwide, it's definitely a lot. So.
You never need to leave Texas, though. I mean, that's what I've been finding. There's infinite opportunity here.
No, Texas is amazing, man. But I think we'll open up to other states eventually, but we're not there yet, man. There's so much stuff happening here that my rule of thumb is I invest in land where people want to be.
Precisely. And I mean, just to piggyback off, I mean, I was trying to even find some data on total cash value or just the asset value of land in the US. And there's not great statistics there, but, even just trying to throw some estimates out, like I wouldn't be surprised if, Texas writ large, it's $500 billion asset class. Like that doesn't seem unreasonable, and multi-trillion for the entire country. Again, just kind of spitballing, even looking decades out there. But something interesting about Texas, and I just saw this research report a couple of weeks ago, but this group was trying to estimate in the year 2100 what are going to be like the top 10, top 20 largest metro areas in the US. And it's hard to predict anything 75 years out, but they did have decades worth, 50, 60 years of census data, migration data, where people moving. And that's about as well researched you can do. And what the top 3 cities in the year 2100, according to this trend, number 1 would be Dallas, Fort Worth with 34 million people. Number 2, Houston with just north of 30 million people. And then Austin, number 3 with north of 20 million, which would be crazy growth considering we're probably just south of 2 million metro area at the moment. But it all, it really just puts into perspective, where the migration trends have been. And if that continues to come down here, we just have really infinite opportunity. All the kind of Texas Triangle cities, besides Houston on the east side, have room to grow in all four directions. And you can just, scan on the aerial maps how many subdivide potential properties are out there. It's just crazy to consider.
No, and that's the 100% fact too, because like even then, like some of our properties that we subdivided, developers have bought those and made their own little mini subdivision out of those. So it's like the little nesting egg principle. Like you get the big old egg and you cut it up and then a bunch of little eggs, and then like we sold to a bunch of guys that they're kind of there's something like 20 acres and they're cutting up that 20 acres into like 30 lots. Like
right. Yeah, no, it's you can always find somebody to add even more value to.
And that's what I love about land. It's I always talk about this is land is a buying at the bottom of the market every time. Mm-hmm. And if you get it at a good price, that's even better because you're buying below market at the bottom of the market.
Yeah. No, it's recession proof as well too. And when you're buying properly and not trying to spec invest years in advance and just ready to move as the market adjusts in real time, it's it's hard to beat.
Are you guys jumping into notes at all, or are you just strictly doing buy sell cash?
Yeah, so we've done a few notes just in our raw flipping business in the past, and we self-manage those notes too. Now I would just use title company and loan servicing.
They're like $20 to $50.
Yeah, exactly. We didn't know that at the time, and we can just pass those payments along to who we're selling to anyway. And yeah, I mean, us as well as a lot of funders, it is more of a cash turnover business. I mean, because we're always looking for more deals. And yeah, if we get stuck in a bunch of notes, we don't have an infinite capital. And so that can really, put the brakes on our business. But given that, that there are, kind of growing group of note buyers who can, buy between 90 cents on the dollar for notes, sometimes, instantly, sometimes, 3-6 months out, as we've learned, and we've learned that from you and Anthony as well. From the marketing side, we are super aggressive with Dispo. And again, this was lessons learned, especially coming into late 2021, 2022, where we were starting to push, 200-day market and so forth. And we got greedy thinking, we're not going to accept this lower ball offer, in our opinion at the time. And then we still have to sell even lower because, the longer you let properties sit on market, the more market risk you're taking anyway. Things can change on you, or the market can just kick you in the teeth right from the start, even if you have the best comps in the world. That's just part of what you have to live with in this industry, no matter how good your underwriting is. So we've really learned from the algorithms of the Zillows and Redfins and so forth, the MLS, that 2 weeks on, even you'll notice your saves and views start to tank for almost every property. And so if we're not getting the response that we'd like, even within 2 weeks, we're ready to knock down that price and try to bump ourselves back in the algorithms again. And a lot of times those views and saves can be misleading and red herrings as well. Like you don't necessarily get serious buyers where they say, oh, this is kind of like nice photos and looks like a nice property, but they're not actually people who are going to want to go under contract. So we've learned that as well, not to get too distracted with what those view numbers are. And then after that price cut, if we might even go 1-2 weeks after that, depending on the absolute dollar value of the property, just keep cutting until we find that number. And again, this is assuming we're marketing properly, have good drone photos, and that there's nothing needing to be done, soil tests, survey as needed for end buyer, all of that squared away. Then largely it's going to be a pricing issue. So we were using this strategy earlier on, just cut if needed. And we probably have to do that on 40-50% of our properties. Some sell right away, but we're still averaging below 4-month hold times, which we think is pretty good in this market. We know even some other more sophisticated land investors, their days on market have been trending upward, even to the 4 to 6 month mark that aren't as aggressive on the cut side. But we learned, hey, if we had been offering owner finance from the start, which is what we do now, then if we could have found a buyer earlier on, then even if we're taking 70 to 80 cents on the dollar for the time a note buyer would be picking up the note, that might still be higher from a cash gain perspective to us than if we have to just keep cutting down the cash price looking for that cash buyer. So that's something we picked up at after 3 or 4 months in the business. And so now we really advocate, especially in rural areas, offer owner finance right away. Just make sure that we're undercutting the market right from the start, and that our property has more attractive features, or maybe a couple of unique features compared to what else is on the market here. Because again, as I stressed before, it's more of a buyer's market at the moment here, and it's really easy to get caught having a property sit on the market for months. So you just have to be careful.
One thing I'm really going to hit on, I'm really glad you said this too, but that first 4 months of your listing is the sweet spot. You got to be actively marketing that thing, because after the longer it sits, it just gets harder to move, and nobody wants to buy it because nobody else wanted to buy it.
Yeah, exactly. And that's something we found too, is that usually your first leads that come in, even if it's within the first 1 or 2 days, your property, I just listed it, maybe I can get a better offer. Probably, 8 times out of 10, the first leads that are coming in are going to be the best ones for your property anyway. Very rarely we've seen somebody come in with a better offer weeks down the line.
Yep. So, man, I'm really, really glad you said that, because facts right there. Chris knows the power, but you got to take those early offers seriously, because they're serious offers in most cases.
Yeah, exactly. And we're again speaking from experience. We've left money on the table from getting greedy and not realizing that the market was going to dry up even a couple of weeks later after turning stuff down. So can definitely take it from our loss.
What is a quote that is yours or somebody else's that you resonate with?
Yeah, so I actually have a quote wall right behind my computer here, so I can always pull something and get reference to that. But one of my favorite ones is action expresses priorities. And so this is daily reminder for myself, and I think a lot of people is hey, we might get inspired about what other people are doing, or we make even a plan over the weekend. Hey, here's how I'm going to hit the ground running this week and so forth. But ultimately, if you're not doing any of those things that you're even thinking about, or saying to other people that you're going to do, that's not actually a priority for you. Is eating right, or exercising on personal side, or taking my business to the $500,000 mark, to the $1 million mark. If that's not actually coming to fruition, then it's not truly a priority for you. And I'm thinking about things that we actually have a real hand in control. And always there's going to be some amount of luck involved with everything, but you can't fully put that as the primary driving factor for your life here. So and I've definitely been, some of the guy with talking bigger and so forth in the past, especially late teens through 20s and so forth, and just wasn't getting the results that some of my peers were getting. And I really had to sit and be honest with myself of you're not actually taking action on these things that you say are important to you. And so that's always one of my favorite things that I keep in back of my mind, even today, just to make sure that I'm aligned with how I'm acting, and paying attention to who around me is also on a similar track.
Awesome. Love it, man. Where can people find you online? And please go check out his Facebook group. I want to plug all that stuff again. Go ahead. Where can people find you online, and where can people learn more about you?
Yeah, I mean, you can see if you're watching on video, and yeah, seriousland.capital is our site, and you have my contact info on that, chris@seriousland.capital, or my direct phone number, 512-807-0800. Feel free to text, call at any time. If you have a deal for funding, you can find all our criteria on the site. Base case, again, I mentioned nationwide, infill, rural, doesn't matter, $20,000 minimum purchase price is generally what we're going to take a look at. So feel free to send anything our way. Otherwise, again, that Facebook group, Land Daily Diligence, Monday through Friday, 2 p.m. Central, feel free to send in deals for me to review. We'll do it, zero cost, live, whether it's for funding or not. So definitely check us out there. Some other social links as we get more active. I'm having my VAs start to set it up. Instagram, TikTok, and X, Serious Land Capital. Some variation. You can find it if or it's on our website. So you can find us more there. But definitely the Facebook group and our website is the main way to get in contact right now.
All right. Thanks for coming on, Chris. I hope you all learned something. Sell your properties faster than you think. Let them go.
Yeah, that's the thing. Yep, stay in the industry. Don't get caught in bad deals. And you'll be in here, with me and Daniel and so forth. Having freedom of lifestyle and freedom of time and money. That's what we're all in this business for. But you gotta be patient and consistent with your skill application in real estate, without a doubt.
There you go. We'll see you next time. Stay tuned. Go like, share, subscribe. You know what to do. We'll see you in the next episode. Thanks, Chris. Bye.
All right, thanks, Daniel.
It was amazing to meet you there in San Antonio and give me a place to stay when my house went out of water, the house that I was running.